But today we are meeting and having a conversation with Cindy Levorah with Nations Lending.
So Cindy, to get started, we're hearing and reading a lot these days about the Fed increasing rates to combat inflation. Can you tell us how this will impact our clients looking to finance a new home or refinance an existing home? And of course, we understand you don't have a crystal ball, but this is your best opinion. This is what you live every day.
That's true. That's very true. So we are expecting 3 rate hikes this year, and one that will be more sooner than later. And those hikes will probably bring rates up 0.5 point to 0.75 point for sure.
Wow. So how are you feeling this impacts buyers' decision making right now?
It seems like everybody's still very excited to purchase, and we're educating everyone the best that we can so that they understand how that'll impact their payment.
And I understand, Cindy, the conforming limit is increasing.
Correct.
To what?
It's exciting. That's at 647,200.
Wow, I remember when it was like 417 or something.
Exactly.
Can you explain what a conforming loan is?
Sure. So 647,200 or less is going to be basically with Fannie or Freddie. So it's going to be a loan that's held through the government and through one of the government agencies. Where when we're looking at a jumbo, that's anything above 647,200, and that's held privately or within portfolios.
Right. And a jumbo loan, obviously, is anything above that.
Yep.
Above that.
So 647,201 is a jumbo.
Right. And another lender issue, but it's really more of a appraiser issue, is we're having a lot of delays in getting appraisals. Do you see that loosening up, getting better? What's going on?
Sure. So appraisals right now are running about 3 weeks. And in 3 weeks, what we're finding is that is the minimum. If you're in an outlying area, it's 4 to 5 weeks. And we don't really see that lightening up. There's a lot of refinances, a lot of purchases that are going on, even delayed financing. And so those appraisers are back to back.
Right.
And one of the things that we find is that appraisers really value the relationship with local lenders and kind of put local lenders ahead of the process. Is that what you find too?
That is true. I think with local lenders, we have relationships that are developed, and they understand and they know how to reach out to you if they have a question, and the same with they can reach out through our appraisal management company if they have questions on our side.
Yeah, so I think that's a real true benefit of working with a local lender that I've found.
Right. Cathy, we're always trying to figure out ways to make our buyer clients' offers more competitive these days. It's such a competitive landscape. And one of the things that we always try to do is to have our buyers ready and pre-approved. And there's a lot of confusion in the marketplace, I think, between a pre-qualified and a pre-approved buyer. I thought maybe you'd want to discuss that a little bit with us.
Sure. So in a pre-approval, that's when we actually obtain documents and we verify all the information. In a pre-qualification, all we're doing is taking your information and pulling credit. And you're sharing with us what your income is, but we're not seeing proof of your income. So in a pre-approval, the loan has been underwritten, it's reviewed, and all we're waiting on is the appraisal.
Right.
And maybe an updated pay stub if needed, a pay stub. So.
And because it's so competitive right now for buyers, we are doing our best to get buyers to work with a lender such as yourself early in the process. So when we submit an offer, we're submitting a pre-approved, and we can be in a better competitive position when those sellers are evaluating different offers.
Correct. Yes, it's much stronger. We also have a package actually that we put with pre-approvals now that spells out exactly that we have underwritten the file, everything's been reviewed, and it's ready to go.
Yeah, and we present that to sellers, brokers, and it just makes all the difference in the world.
Right.
Kind of going back to appraisals, though, can you talk to us about the waiving of appraisals?
Sure, absolutely. So waiver of appraisals only happens on conforming loans. That's all.
Yep.
And so in conforming loans, we never really know when we're going to get an appraisal waiver. It requires a minimum for sure of 20% down. But oftentimes if you put more down, then that home will get a waiver. If that home is free and clear, though, sometimes we will not get a waiver. So if the current owner it's free and clear, and it hasn't been on, with Freddie or Fannie for a long period of time, they don't have anything in their database to go by. So sometimes we're surprised that we don't get waivers. Somebody will be putting 50% down and we don't get a waiver, and then somebody else will put 20% down and they get a waiver. So there's no real, they have an algorithm that they use, and we don't know what that is.
So you literally put that address and the purchase terms in the computer, and it tells you whether or not the appraisal will be waived.
Correct. That's where we determine. And what's just for every full disclosure, we usually have an appraisal waiver go all the way through, but sometimes at the very end, when they finalize everything up, that a waiver sometimes gets pulled, and we don't know why when they do that.
Yeah,
So,
interesting.
yeah. But it does save quite a bit of time and money.
Yeah.
So.
Well, very informative today, and we hope that you enjoyed and learned something, and stay tuned for another conversation Cathy and I will have regarding Santa Fe real estate.
Thank you, Cindy Levorah.
Oh,
Thank you, Cindy.
Thank you so much.